Hey, I'm Supats, lifelong solopreneur. Now living my life with only one passion to help solopreneurs to launch their digital products on fast track so that they can be profitable as fast as within 1 week, and they want to scale, they can join the membership. And as a bonus, I show them how they can sell their digital products all over the world using affiliates. Without further delay, let's get started. Today we have an income coach Steve Selengut. And his portfolio I was going through his website. It looks so interesting. Personally, I really don't know much about investment because I always tell my husband that our roles are very well defined, that he makes money, I spend money. So he's in charge of everything. He's in charge of investments. He keeps on telling me what stock trading he did, and we never got into real estate, but he is very actively into stocks and all. So now I have another perspective, another really qualified coach who is going to tell me about investment. And I'm pretty sure he is going to simplify it enough so that I can understand and you can understand. So without further delay, let me invite Steve Selengut. So tell me your story. How did you get started into this area?
How did I get started in investing? It goes back a long way because I'm an old guy. But I guess it started in my pre-investment life where I was in a family that was run pretty much by my mother, but like what you're talking about, uh, the dad was the one that brought in the money. That was all he was supposed to do. He didn't make any other decisions than those. But he had a pretty successful business as a real estate developer, builder, and so on. And to sum it all up, he had um, a business that had multiple streams of income coming in. He had rental income, he had insurance premium income, he had interest income by providing mortgages to people who bought houses. He had a lumber yard that all his contractors, his subcontractors would use to buy materials. And he had, of course, the sales of properties, the profitable selling of assets. So we all knew about this. My brother and I did anyway. And I guess it sort of sunk in. He also made sure that in our summer employments that we were kind of forced to have, that he would take 25% of anything we made and he would put it away to invest for us. So when I was 25, you see that table that's pictured in front of between us here? Just picture a legal size manila envelope being opened up and emptied, and 40 or 50 different stock certificates coming out of it. Now, in the old days, people actually had the certificates that represented the shares they owned in companies. Today, it's all managed electronically, so that doesn't happen again. So I was told, it's this is yours, kiddo. Don't lose it, something like that. So I did. I took it. I put it with a really nice woman who was a stockbroker at a nearby firm, and we got it all sorted out and put it into this portfolio of, it wasn't really that electronic in those days, but it was. Um, they used a computer to keep track of everything, of course. And she taught me an awful lot about investing. And I told her that I was pretty much interested in generating income. And she said, "Yeah, you can do that with these stocks because they all pay dividends." And we started tracking them and looking at the fluctuations of prices, what I grew to call the market cycle, where you it was it was predictable only that it would go up and down. It wasn't predictable when and how much, you know. But you knew after looking at these high quality companies like IBM and General Motors and GE and some of the pharmaceutical companies and so on that I owned, that even though they went up and down a lot, they always did go back up again. So you could feel very safe in owning them from a financial risk standpoint. And what she and I put together was the idea that, and since not only was the market cycle, but different sectors would go in different directions at different times as well. So you could always take a profit in one piece and put it into another that may not be in a higher position. You know what I mean? So you could sell something at a profit and then buy something else that's, let's say, down from its high and stuff like that. And we started doing that, and we did that for years, and we broadened the number of stocks that we owned, and we diversified into income securities like municipal bonds that paid tax-free income, and other investments like REITs, mortgage investments, and just a whole myriad of different income producing investments, as well as the stocks that we owned, or I should say that I owned. She earned commissions by um, encouraging me to take advantage of the market cycle, and I thanked her for it because we made a whole lot more than she got paid in commissions, but she did all right too. So eventually, and at the same time, I was commuting to New York. I lived in North Jersey. I was about a 45, 50-minute commute at that time. It's probably about 2 hours now from as far as I was out there. And I wasn't really in a position that either my wife or myself thought was going anywhere, you know. Um, but I was in a pension investment department, and I learned a lot about investing from that area as well. But in any event, by the time I was 34 in 1979, I was making more in income from my dividends and trading those securities, those blue chip type securities, 5 times more than
Oh,
I was making at my job. So,
yeah.
yeah, wow, huh? So I pretty much came home one day and said,
Yeah.
I don't have that job anymore because I figured this out that I've I've done all this. I've made all this money, and it's a steady stream of income, more than those guys are paying me. I can get rid of all those three-piece suits and ties and things like that, and I can go into my father's building and get an office there, and I can start doing
Wow.
this for other people. And that's how it started. So in 1979, I started this business. I had two clients and myself. We had, between the three, myself and the two clients, I don't think we had $500,000 under management. And then 40 odd years later, in May of 2023, I sold a business that had over 110 million under management, and walked away from the private investment management business. I still manage my own, and I wrote Retirement Money Secrets, which is a book that pretty much tells the story of how you can do that for yourself, how you can get to the point where you're income independent, where you can just be making enough safely with your investments that you can really choose for yourself whether you're going to continue in the career you got, you're going to start something else, or you're just
I
going to
need to
walk away
grab
and
hold
travel
of
the
that
world.
book, because
So
my husband is very much into investing, and I'm going to get that book and give it to him. Yeah, for sure. And I remember you saying that your dad had multiple stream of income, and that is so interesting because I help people launch their digital products, and I always tell how important it is to have side hustle. And I always tell them that don't put your eggs into one basket. And I was talking to many budding entrepreneurs, and they said, what, putting eggs into one basket? I have only one egg. I said, okay. So, yeah, it is so important because
Well,
people have insurance for everything. They have health insurance, home insurance, car insurance, but there is no job insurance. And still means
right.
basically many people don't take any action. So it is our job to basically educate them, right? Yeah, and you started early on, and your dad
Yeah,
taught
yeah.
you how to start really early on. And that is so important because you start saving even $1 a day or even $1 a month after a few decades. That value
Mhm.
is so high because of the compounding interest, right? It's yeah, but it's always
Right,
again
exactly.
there is
Yeah.
proverb like that, when to plant a tree. So the best time is to plant yesterday, but if you haven't planted it, the other best time is today. So this is you are planting a money tree. So
Hmm.
that is really amazing.
Yeah. I almost had a money tree as the cover picture of the book. I
Okay.
almost I
So
almost went
basically,
there, but not quite. So, but like what you said about eggs and one basket. One of the a lot of people make the mistake of not necessarily only investing in one particular security, but only having that one stream of income is their job and not really putting anything away in a spot where it can replace that income instantly. The approach I'm talking about uh, a involves using your the money you've saved, the money you've put away, or the money you are now starting to put away into a type of security that is both safe and has the purpose of generating income instead of just looking pretty. On Wall Street today, most people focus on how big the value of their portfolio gets instead of how big the flow of income from it becomes. And it makes my approach a little bit unique in the area that we're in the field, but the way it works and the way you can get to the point where you start looking at something like the Great Recession as an opportunity instead of a problem. I think that's a very valuable place to be, uh, both mentally and economically. Uh, I don't worry about what the market's doing today. I mean, I haven't yet looked carefully to see what the market is doing today, and it's almost noon, and I know I have um, probably almost six figures worth of orders entered from this morning. Then I don't know what they've done yet,
yeah, if you have a winning
and I
strategy,
don't need
you
to.
really don't need to worry
You
about
know?
little bit of fluctuation up and down because
Yeah,
yes, you
because
have to follow the winning strategy. So I remember, yeah, you mentioning that. So just wanted to
right,
tell
because
you, I have been a solopreneur almost whole of my life, but before starting my businesses, I worked into corporate world, and I remember once actually we got like a bonus for 2 days. Okay, just for 2 days means it's not that significant, right? Just 2 days bonus, and everybody at the lunch table were discussing what are they going to do with that 2 days of bonus. And then they asked me, what are you going to do that? I said, is it
mm,
necessary to spend it? I just couldn't believe it because everyone was living so much paycheck to paycheck that even just 2 days bonus extra they got, they were thinking of spending it. I said, why can't you think about tomorrow? Why can't you do some investment? There should be some saving because my parents, they showed me the value. My both parents, they worked, and my mom's salary went completely into investment, and my dad investment into real estate. He bought land like crazy, and that appreciated so well. and we lived actually in 50% of his salary. So we lived quite okay. It was we didn't feel any lack as such, but it was such a blessing. Means we never had to
Hmm.
worry about money. We never had a sleepless night because we knew that we were taken care of. And when I moved to US, it is a totally different perspective. Everybody just, every dollar, every penny they get, they are thinking of spending. I don't know why it is like this. Tell me, because I was brought up in a totally different household, and here it is a totally different culture.
Yeah. Well, it's sure not because they
Oh
expect to
my
live on
goodness,
Social
how can you
Security.
depend on social security? Is
That's
it
not going
going
to
to be
do it.
there for you?
Well, it's a pretty good bet that it will be. It's still a large voting block that uses it, and eventually, hopefully, it won't be taxable anymore like it is now. You know, but who knows what's going to happen? But the point you're making is very good, and that point being that you got to start putting stuff away for yourself. Now, people now have IRAs, and usually at work they have 401ks or something similar to that that they can participate in. But unfortunately, none of those things, well, the IRAs you can design to grow income, but the 401ks, it's really difficult to do anything with on a constructive way. But you can actually manage that money because you can periodically you can change your allocations. You can, like right now, the stock market's at the highest level it's been since there's been a stock market, pretty much, right? It's right up there. And if you have a large 401k and it's mostly in the stock market, it's a pretty easy thing for you to tell whoever you talk to about it, take me out of the stock market. I want to protect those gains and move me into the bond market because the bond market is still down compared to where it was 5 years ago, and they're talking about lowering interest rate, and that'll make the bond market go up. So this would be an ideal time to make that kind of intellectual change from something at its highest level ever. We don't know if it's going higher, it may, but eventually they always go down. There's never been a rally that hasn't succumbed to the next correction. Just has never been. So it's not likely this is going to be the time. So that's the type of thinking that you have to have, even when you don't have that. You can't specifically say I want to buy this and sell that. But when you do have that other money, let's say you sell one of those properties that you own, and all of a sudden you've got 6 or 7 figures that you say you have to invest. You don't want to put it back in the properties because the rent after all the expenses is not enough. And then somebody like me, you read my book and you find out that you can invest in safe securities that are paying around 10%. You say, well, OMG, I'd like to find out a little bit more about that. And I'd like to find a set of these securities that I can invest in, and I can start seeing that monthly income coming in and growing from quarter to quarter and year to year. And that's what I do as a coach. I show people how to increase their income level and to make it grow every quarter, every year, regardless of what the market is doing. It doesn't really matter
No,
to
that is the
me
most
which way
important
the
thing,
market
because
goes
the market
because I'm going to take,
fluctuation, because I know
yeah,
many cases they invested money only in the one company, and that company went bankrupt, and they were belly up crying and all.
yeah.
And we have taken actually Warren Buffett's investment class, and there they mentioned that Warren Buffett invests only in the daily consumables. He doesn't invest into really high tech, or
Well, well, he's a value investor. He's a very successful investor, but he doesn't for him he
yeah,
he trades
yeah,
companies, not
it's a
stocks.
different level.
You know what I mean? So he's much bigger, but his focus is not on income because he doesn't have to focus on income. If I were a multi-billionaire, I might not be as so focused on income as I am, but I'm not, and neither are most of the people I bet that are listening to your to our conversation right now. And for us, um, I would say there's really four things they have to think about because they want to grow income, even though they don't know they want to grow income because they're not near retirement yet. But eventually, they're going to realize that they need income, and there's a way to do it safely and with a low level of risk that they. So they really need to determine how to
Mm-hmm.
minimize financial risk, if you know what I mean. So you don't have that situation where the one thing goes bankrupt and all of a sudden you're left with nothing. And there are really four ways to deal with risk. And I explain those in the retirement money secrets. And the first way is to make sure that what you are placing your money in as an investment is of a high quality. And you have to develop measures. What is quality? To me, a quality company is one that pays a dividend. It's been in business for 5 years or more. It has a diversified product line. You know, it's well respected. You know its name. It's been there a while. You know, so there are many ways, and I use what's called closed-end funds, which are trusts that are comprised of literally hundreds of different companies, and they're managed trusts, unlike ETFs, which are not managed really, and mutual funds, which are really only managed when there's nothing really going on in the stock market. The other time they have to, if everybody's panicking, they have to sell. If everybody's being greedy, they have to buy. They don't have any choice. The closed-end funds that I use are managed by people that aren't dictated by the mob. They make their own decisions. Um, so I look at quality in them as, again, similarly, things that have been around for more than 5 years. They have at least 50 individual companies inside. Most of them have hundreds. Things like that. They've paid regular dividends for years and years, that nature. And then the second thing that most people may not be aware that minimizes risk is diversification, which means you want a whole lot of these things. Now, I'm one of these people that takes diversification to an extreme. I don't use it just as a defensive mechanism against risk. I use it as an offensive weapon to make sure that I own a little of everything that's going on in the economy and in the world economy. So if something positive happens somewhere and it benefits all the companies in that region, I'm going to benefit. My closed-end funds are going to go up in price. That type of thing. The diversification I use. A third thing I use for investing is I never buy anything that doesn't pay me some income, either interest or dividends or distributions in the case of these things. And it doesn't have to be a rising stream of income. That's nice, but it has to be a stable and steady income. And then the final thing I do, and this is something that most investment advisors will stay away from doing, and that's taking profits. I run my portfolio like you would run a department store. You have a department store. It's full of all the merchandise and all the services you can think of, and I have a target profit level that I'll sell these things for. So when somebody comes in my store and they want to pay my margin, my profit margin, just like you would if you were owning the store, you wouldn't say to them, "Nah, I'm not going to sell it to you for that price because I think the price is going up tomorrow." You're going to take your profit. You're going to turn this merchandise over as fast as you can and reap those profits coming in. And
So you
and
mentioned,
that's how
yeah,
I run a portfolio.
you mentioned the book. Where can
So
we
my
buy your
portfolio.
book?
Go ahead.
Okay,
The book's at Amazon and almost any place else you can get books. There's an Audible book
okay,
that's available only at Amazon. But the other three, the ebook and the paperback and the hard copy are popular
okay.
are available everywhere. And and the book sold very well. It's sold
Wow.
over 4,500 copies already. It's been and
Oh,
it's
that's not
it's not
common. I
that's
think it
not
is like
common
you are
for a
touching whatever it is
nonfiction.
turning into gold.
Well, yeah, I think I've made people realize that they can
Yeah.
turn themselves into a little bit of gold, if they take follow the rules and don't
Okay.
take too many risks,
Yeah,
they can
because
get
it is
there.
so much needed to have the extra money, extra investment. I remember a couple of my friends, they got cancer, and insurance didn't cover a full treatment, and Medicare is basically, oh my goodness, most of the things were getting denied. So finally, they had to sell their house, and in spite of that, within 6 months, yeah, they were gone. So it is many times people
Mm,
really don't have foresight. They think, oh, okay, like now my life is good, but it's not going to be the same whole time, right? Means it can change anytime at any age. It's not necessarily the life is going to change only in your 80s. It can even, I have seen life changing and those kind of things happening even in 30s and 40s for my friends. But it's always better to be prepared, right? Be prepared for your
mm,
rainy days. It's really, and
right. Yeah.
I have also read a book by Rich Dad Poor Dad. He has many books, so cash flow quadrant and all those things. And there he said you should have a clear distinction between what are the assets and what are the liabilities. Now, for example, we had a topic that Trump is going to increase the basically tariff to incoming things, and also the prices are going to go up and all. So we should buy something. Thing. So my husband was saying me we should buy a car. I said we already have cars for each one. Why should we buy extra car? Because if that is not a asset, that's going to be liability. So many times people really don't know the distinction between asset and liability. So as from investment point of view, can you just elaborate?
Sure. Well, yeah, an asset. If it's an asset of yours, oh boy, that's a really tough one to nail on the head because a home is certainly an asset, but it has some liabilities in its nature. It has costs. And you have to understand that there is maintenance involved with it, and that not only it's got insurance, it's got taxes, and it's a lot of different costs that are associated with it. And if you don't have income to cover those costs, then a home can be as much of a liability as it is an asset, even if it's an asset that might grow in value. And if you can't take care of it properly, of course, then it might lose its value. So an asset is something hard and fast that you own. I like assets that produce money. Like there are physical assets, like we just talked about. Homes, jewelry is a kind of an asset, something like that. People sometimes put a lot of wealth into things of that nature, but they can sell it and get that money back. So an asset is. I like assets that produce income, and I use financial assets. Financial assets are stocks and bonds, and I use the stocks and bonds that are contained in funds because those funds let me have a wide diversification of those individual assets. So if something bad happens to one of them, it doesn't affect the whole very much. I have a large portfolio, and nothing in my portfolio represents even 2% of the total. So I'm very, very well diversified. Liabilities are pretty much there are fixed liabilities and there are variable liabilities. Fixed liabilities may be those taxes and that insurance and insurances for your automobile and so on. But the variable expenses are the other things, how much you go out to dinner instead of making your own. I mean, there's a difference right there, maybe 3 or 4 times the expense. So their liabilities or debt that you might have. You've got to avoid debt, particularly in a country where they allow the um, the lenders to charge usurious interest rates in the 20% range, like they do here. You'd be, it's very foolish to enter any debt when you're paying 24, 25% interest. That's crazy. As an investor, I look at that as 2.5 years of income to pay that debt down. It's just crazy, you know. Um, so liabilities can also be responsibilities, can be liabilities. I mean, somehow you can sometimes think of your children, no matter how much you love them, as somewhat of a liability sometimes, so that's the difference between assets. I think assets should be something that produces money for you. That's an asset, a productive asset, a sedentary asset like a home or a piece of property somewhere pretty much just sits there, but it does have costs associated with owning it, and then you get past that, then you get into the point where your lifestyle and what you do with the money you make, some of that can be the liability part. So it's when you go to investing, you're only dealing really with assets. You have to go out of your way to make those assets become a liability by borrowing against them. You can make a good portfolio an instant liability when you borrow against it irresponsibly. I don't, when I was managing money for other people, there was, of the 150 odd clients I had, there was not one account that I managed that had any margin debt in it. Not one. I wouldn't stand for it. They wanted to borrow money on their portfolios. I told them to go get another investment advisor because I wasn't going to do it. Because it's ruinous.
I
It
know.
is. It's just ruinous. And it's a very in the stock market, in the financial markets, it's a variable rate. And if you don't have that money in cash in your account the day it's due, those suckers are going to sell something to pay that debt. And you don't have any choice of what it is that they sell. They just pick something and sell it. You have no control over it. So those are, as an investor, you've got to avoid. There are some people that specialize in having debt-based investment programs. I've never been able to make
I
myself do
know,
that.
actually, I
I think it's
remember
crazy.
everything buy
You
now,
know,
pay later, buy now, pay later, borrowing and loan and all, because I was brought up that if you want to buy something, pay cash, otherwise don't buy. And here it was always like that. Okay, buy now, pay later. I remember actually I went to one clinic because I wanted to know whether they are part of my insurance in network or out network, and I kept on asking them, "Are you in network or out network?" They refused to tell me. So finally, I went to the clinic and I asked them, "I want to know whether you are in network or out network." So she said, "Don't worry, you don't need to pay right now." I say, eventually I have to pay, right? So I want to know if you are in network or out network, so that
right?
accordingly I can make my decision. But people think like, okay, I don't have to pay right now. It doesn't mean you never have to pay. So the borrowing and buying, getting loan and all means basically that concept. We have to get over it, and really we have to take charge of our financial future. I want to ask you, what is
Yeah.
the ideal customer profile for you? Because I told you my husband does investments, but even my daughter, she does investment. I remember actually she's in her early
Mm,
20s, and she files her own taxes. So our CPA, when she was going through the taxes, she didn't look for the investment corner for my daughter and the Bitcoin and all those things. And then my daughter replied to her, she said, "I did investment and I made money. So please consider that also into my tax return." And she was really shocked. You are in your early 20s and you're doing investment. So who is your ideal customer profile? Means basically, whether my daughter, who is in her
well,
20s, she can join your program, and my husband, he's way older than her. whether he can join. Who is your ideal customer?
Well, the most often, and the people I think that need an income focus most are those who are either in retirement or approaching retirement, because they have to switch gears, so to speak, and change their focus to the income. Uh, but on the other hand, um, those people who are just starting out in investing, um, it's very important for them to avoid risk as much as possible when they're just getting started, unless even if they have some sort of a financial background, because people tend to get caught up in the hype of the markets, and they'll hear that, uh, like Nvidia, for example. I gotta own Nvidia. I gotta own Nvidia. This one's going to go to it doesn't pay any dividend. It's way overpriced. Um, and as you've seen recently, it's had its serious ups and downs. And then when you're just a newbie investor, you're going to panic when it goes down, and you're going to sell it at a loss, and you might go back right back in it again or not. But who knows? So I think the startup investor needs my type of investment program even more, because you don't want to take those losses when you're young. If you in your 20s can set up a portfolio that you're adding to, that's paying an income stream of 10% a year, it's going to double every 7.5 years without you even adding to it, without you even managing it and taking profits, just based on the income you're receiving. And you've got 40 years before you're going to need to use it. So, and if you're adding to it extra a month, that even accelerates that growth. And you don't need to take a whole lot of risks. And I wouldn't encourage people to take risks until either they hire somebody and they know exactly what kind of risk that person's going to take, or they have enough time to manage their portfolio themselves. One of the things you have to realize if you're using a financial advisor is that they're very rarely going to encourage you to take
Why?
profits. And it's not because they don't know the benefit of profits. It's because if they initiate you selling that position you have in Microsoft that just went up 100%, and you're making $10,000, and they sell it without your okay, and that guy looks back 5 years later and says, "Hey, that guy, that dope, sold my Microsoft, and now it's 4 times higher than it was. I'm suing him for the difference." And they can get away with that. So an investment advisor is not going to go out and take your profits, even if he thinks something has gone too far. Whereas when I was managing money for Field, they had to sign a contract. And in that contract, I told them, I'm taking profits. And if it ever goes up as much as 10%, I'm out of there, man. And you can count on it. I'm going to take your profits. I'm going to reinvest it, and something else I invest in is going to go up and up. So it's a cycle of different things. But I'm not going to let it's. It's like walking down the street and seeing $100 bill and thinking, and your thinking becomes, this is an inexperienced investor. I'm one. I'm not going to pick up that $100 bill because I'm going to walk back here tomorrow. It's going to be $200 because I know it's going to continue to rise. That's how most people deal with the stock market. They think their things are going to go up forever. They fall in love. I've seen portfolios as a coach where there are millions of dollars invested in only 2 or 3 securities, none of them paying more than 2% income. And the guy's wondering where he's going to pay. How am I going to pay for my grandkids' education? I don't have any money. Well, you don't have any money because you got all this money tied up in something that's not paying you anything. So I like to see people get started with at least a thought of income in at least 30% of
So
their
many
portfolio,
times,
even when
actually,
they're
people
young.
think that
That's what I
investment is like a gambling in Las Vegas, but it doesn't need to be if you have a winning strategy, right? So winning strategy like you, yeah.
Right. Yes, there should be no gambling at all, but all the terminology you hear when people are talking about it, well, I'm going to bet on that, or that type of thing. They treat
So
it like gambling, and actually, they even
So
encourage
we are
people to
almost actually
treat it
at the
like
end of
gambling.
our podcast, but I wanted to ask you, what all the offers do you have? Do you have a group program or you have a one-on-one program? If someone wants to contact you, how can they contact you?
Okay, I have a website called theincomecoach.net, and everything I do is described there. And I also have a community that is just now being offered and developed where people can join for as little, right now, it's $20 a month. And they can get all kinds of educational material. It's like
Oh
the
yeah,
education you didn't get
college
in
you don't get
college,
any education, neither
and
money state nor
it has,
nothing. Yeah.
even did I. And it gets, there are free Q&A sessions, and there's a lot of individual stuff that is, we're developing it. It's got a lot of information now. It also has a vetted list of securities that are paying between 9 and 10% in the closed-end funds that have paid distributions forever and have a lot of all the quality things we were talking about inside. So I think it's a good deal, and they can find out more about that if they contact me from the website. There's nothing yet has been put on the website about it. It's that new. We just started it. We just started it this past week, so
Thank you for
it's up and coming.
coming
So
here and really educating our audience. Totally appreciate. Thanks a lot, and we personally surely will join your community because hey, if you can get wealth of knowledge just for $20 per month, yeah, I mean it is a no-brainer offer. Thanks for being over here, and yeah, God bless you. Thank you. Take care.
Hey, thanks for joining us. We are blessed to have you as part of our community, and whatever way we can help you, serve you, let us know. Please subscribe and let us know how we can help you, what resources you want. We have lots of free resources and also free collaboration joint venture groups you can join and explode your business, because most solopreneurs quit their business before they launch their first products, and I don't want that to happen to you. And that's why we have special launch service where you can monetize your digitals and become profitable as fast as within 7 days. And if you want to scale your business, join our membership New Beginning Success Collaboration, where we'll provide you MRR and PLR products and collaborations so that you can scale your business with ease and effortlessly. And hey, if you want to sell your digitals all over the world, yes, we will provide you affiliates more than 200 countries. So everything is possible. Just live your dream, follow your dream, and whichever way we can help you, do let us know. Thank you and God bless you.